It's essentially all of the above. So, you guys have a great deal going in nuclear. So it's nuclear, it's everything, because we are short electricity in the world for the first time. In the US, we haven't been short in a long, long time. And so the entire mindset has changed. And we now are going to see, just back to my sizing of this, the three biggest electricity companies in the world have a combined market cap of 200 million. And we're going to spend 200 million on the electricity market each year for the next 5 years in the US. I have no idea how this is going to happen, but it's going to be interesting.
Great. So Bruce, back 2017, you bought a company called Westinghouse, which just came out of bankruptcy. Today, it's a company was just announced last week, is entering into an $80 billion contract with US government, right? You're going to build a massive nuclear reactors around the world. Tell us about that investment, how that fits into your overall energy portfolios.
So we have been for 30 years one of the biggest builders of power plants. We started in hydro, we went to wind, we went to solar, and in 17 we saw an opportunity to buy a nuclear company at a value which was how much you paid? Which was a value-based purchase. We put $1 billion of equity up, and we thought if nothing changed in the world, we'd do okay, and if odds favored that clean energy with nuclear was eventually going to come back, we just needed time. And I don't think we could have expected what happened over the last 5 years. As you know, and maybe just to step back on Jim's comments, is almost every single country of the world, but in particular in the United States, which is the largest consumer of energy, the grids are going to need to double over the next 15 to 20 years. The grids are going to double over the next 15 to 20 years. They've been flat for 25 years. That's what's going on. So the US government just gave us an order to buy upwards of $100 billion, but $80 billion to start off. It might be double that of nuclear plants. And the reason they did that is because they recognize that we need to restart the supply chain for nuclear in the United States to be able to build. And we were going to build one plant on our own, finish one in the United States, but we needed 10 to be able to build the whole supply chain out in the United States. So they committed to buy these nuclear reactors in the United States. They're going to give us locations for them on federal lands. And it's going to be really exciting for the sector. But maybe to the point, there's over a million gigawatts of power in the United States. This is 20 of total energy consumed for electricity. This is 20. Point being, we need all of the amounts of energy of what's going on because of electrification of industry, of cars, and of data centers consuming enormous amounts, and so it's a very significant thing that's going on in the U.S.
Just to size this, and I'll jump off a second. Why do you get excited as an investor? The market for energy addition has been about 29 terawatt hours a year in the U.S. for the last 15 years. It needs to be 400 terawatt hours for the next 5 years. So we have a market that needs to increase 10 times. And we have high payers coming into it who are willing to pay 2 to 3 times market to get power faster. Again, I have no idea how this works out, but this is a really interesting set of questions.
Great. So Samara, you also put a lot of money into work in the new energy space, right? You just raised a new fund, actually, for that. Tell us, your sort of investment strategy in this new energy in connection with the AI, increased demand.
Yeah, and I think as Bruce said, it's not just AI, and Jim said it as well, everything is electrifying now. So together with population growth, urbanization, all of that, these new trends of electrification of transport, everything is driving very big demand. And I think, sadly, we're dealing now, I know previously we had a sustainability climate focus on this, but we realize now we have to thread the needle between availability, the accessibility, and also the affordability of energy sources together with dealing with the climate impacts of it. And that is a difficult needle to thread, but it's going to need massive investment. Not just in generation, which is what we've been talking about, but we need a lot of investment in midstream infrastructure as well. Grid capacity is constrained in just about every market we're in, transmission, distribution, also pipeline networks. So I think it is a big area that's going to need investment. The regulatory frameworks play a role in a bunch of this investment, especially bringing on new technology where they have to catalyse private sector investment through some support, but then also the planning approvals, etc. So having a good glide path for each country is important. So I think we work also with the public sector in most of the regions we're operating in to try and think about that glide path and what role our private capital can play, but we're going to need a huge amount of capital, expertise, etc. to deliver this.
Thank you. So let's go back to the legacy infrastructure investment. Bruce, so you also invest heavily into commercial real estate globally. What is the dynamics there? Do we see that market coming back as people back to work? What's your take?
So real estate in general, it's a cyclical business. One should always remember that. And there were two things that happened this time versus others. Interest rates went up quickly, and their mindset changed that people were not going to go and be in places. I think those are the two fundamental things. Each cycle is different, and this time it was those two. On the opposite side, fundamentals of most real estate in the world, Hong Kong a little different because the leases are short, but in most other places of the world, fundamentals are really strong. So you have underlying fundamentals are strong. What happened was the psyche of lenders and buyers got messed up, and interest rates went up quickly, and that affected financing. What's happened now is that interest rates are coming down. Everyone understands. Everyone's going back to the office, and all other forms of real estate are in excellent shape. What you've seen now is in most cities in the world, there is no construction going on, and there is no space left, and rents are going up.
Sure.
Rents have doubled in New York in good buildings, and they're going higher, probably by another 50%.
What about Hong Kong? You're here, so what's your outlook for Hong Kong?
Yeah, so Hong Kong, here's what I'd say. There are greater experts in this room on Hong Kong real estate, but I'll make one broad observation. This is in all value investing in real assets, but in particular in real estate. If you have businesses or cities that are great places, Hong Kong qualifies. And if you have a tough market where things are down, they come back fast. And Hong Kong's turned, and there's very little construction. It's a very constrained place, and real estate values here will come back and be at their peaks at some time in the future.
Great. I hope that future is very close. All right, so...
I wasn't talking about your apartment.
Okay, so one last question for Samara and for Jim, right? So we talk about data center, energy. It seems to be that we're assuming there's unlimited capitals available out there, right? But in reality, who's going to fund those big investments? We knew that institutional investor has always played a very important role, including the sovereign wealth funds. But is retail have to be part of that picture, and how we look at that sort of, the supply side of the capital?